Heading into the close, it's time for your top 10. Coming in at number 10 today, Barnes & Noble up 5%. The company agreed to split its bookstore chain and e-reader business into separately traded companies in a bid to improve its performance. The stock having its best day in more than a year and touching a one-year high.
Number 9 is Whole Foods, up 0.5%. The company will pay about $800,000 in penalties and fees after a year-long investigation found the supermarket chain was overcharging customers in California. Only in California? I feel like I'm overcharged every time I go in there.
Specifically for prepared foods, and it was that they were not deducting the weight of the container that the stuff was being weighed in. They would sell a kebab by the piece and not by the pound. It was very specific.
I got it. Well, come to the Whole Foods with me on 57th Street and you'll see the same kind of behavior.
At number 8 is Hanesbrands. It's up 9%. Shares are hitting an all-time high after the company agreed to buy DB Apparel, a French lingerie and underwear maker, from Sun Capital Partners for an enterprise value of $544 million. Hanesbrands said the purchase should boost adjusted earnings per share by about 25 cents in 2015.
DB.
All right. Number 7, Apollo Education Group up 6%. Third quarter earnings fell 17% as the for-profit education company continued to report declining enrollment. However, the stock moving higher as results topped estimates on both the top and bottom line. Shares hitting a 2-month high.
Number 6 is General Mills, down 3%. The maker of Cheerios posted a 10% rise in quarterly profits, but the results still trailed estimates. General Mills also said it started a review of its North American manufacturing and distribution network as part of a wider effort to cut costs.
Number 5 is Coach. It's down just slightly. The leather goods maker hitting its lowest level in more than 4 years, though, after Bank of America downgraded the stock to underperform from neutral. Coach is now down 40% this year alone.
Crushed. Crushed by Michael Kors, right?
Here we go.
In part, yes.
Yes, you know so much about this.
It's, you know what, I have to say, it's not like a total luxury item, but it's in the level where I feel comfortable picking up something for my special lady friend whenever we're there, you know? And it's like either one or the other. You know what I'm saying?
You're going with Michael
Does that make me sound cheap?
No, you're going with Michael Kors. All right, number 4, Carnival Corp, in the red right now. The cruise line reported quarterly earnings that sailed past Wall Street estimates and said bookings for the rest of the year are ahead of last year's pace. Carnival said the company was buoyed by stronger revenue and lower cruise costs.
Number 3 is Valero, down 8%. The company is one of the refiners that's falling at the Commerce Department. Cleared the way for the first exports of unrefined U.S. oil in 4 decades. Not since the 1970s have American companies been allowed to sell their oil overseas. Shares now hitting a 3-month low.
Number 2 is Monsanto. It's up 5%. The seed company announced plans to buy back $10 billion worth of its stock over 2 years. The move comes after Monsanto ended preliminary talks about a potential takeover of Syngenta. That would have been a big deal. It's a $36 billion competitor that would have cut its tax bill.
Okay, coming up on our number 1 stock of the day, up 2%, Google. Shares of the search giant announcing today that Android TV devices are coming later this year as it races Amazon and Apple to control digital content in the home. Google's teaming up with partners like Sony, Sharp, Showtime, and Netflix.